Hello viewers, welcome to my channel. I'm Hasham. Now in this video I am going to explain you about the next head of income, that is profits and gains of business and profession. Already I have given so many lectures on computation of income from salary, income from house property. First of all, introduction to Income Tax Act. So last so many videos, if you are regularly watching, you got a good grasp on the subject of income tax for the assessment year 2021. So if you have not watched earlier videos, I suggest you to go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021 and so watch the introduction part, then income from salary, income from house property. Now we'll start this one. So apart from this income tax, I have uploaded so many other subjects videos like financial accounting, advanced accounting, cost accounting, corporate accounting, managerial accounting, and income tax. Apart from that, business statistics, financial management, investment management. So many videos I have uploaded. Select your subject, select the topic, watch the video and increase your knowledge on your subject. Now I am going to start this subject, this chapter, that is profits and gains of business and profession. See, the problems are based completely on the provisions. So if you want to get a good command on this subject of income tax, you must watch till the end of this video. All the provisions I am going to explain in detail regarding how to compute the profits and gains of business and profession. If you skip this video, you cannot be able to follow the coming problems. The problems are based on these provisions which I am going to explain you in detail right now. So first of all, profits and gains of business and profession. Meaning of business. Business, specifically Income Tax Act now has not given a specific meaning to the term business or profession. Business is an economic activity which is conducted to earn the profit regarding the production, distribution of goods and services. That is called the general meaning of the term business. But distinction between business, profession or vocation, we are not required for income tax part of it, because we need to calculate the income earned by the business or profession or vocation. That's what we are going to learn in this topic, how to compute the profits and gains. Now, incomes chargeable under the head profits and gains. Income Tax Act has not given a specific items that these are the items only that will come under profits and gains of business or profession. It has given inclusive definition. Means business, these are the incomes. The following are some of the incomes which are included under the head profits and gains. So inclusive definition are given. So inclusive definition says profits and gains or any compensation or payment received by any business, or apart from that any income from speculation activities, any interest from securities in which securities are held as part of stock and trade. So examples are given. These are some of the examples which come under the head business and profession. Examples are given. Next is business incomes not taxable under the head profits and gains. There are some incomes which apparently it looks like business income, but Income Tax Act says these incomes are not taxable under business income. It will be taxable under other heads. For example, house property, rent from house property. Normally, a person who is owning the house and given the house on rent, so rent received is taxable under the head income from house property. Similarly, some people will keep the house property as stock in trade. They will purchase the houses in order to sell them. In that case, the house property is stock in trade. Till the time it is not sold, the person, the owner, may let out the house property and earn some rent. In that case, Income Tax Act says it is taxable under the head income from house property, not under income from business. Similarly, a person whose main activity is buying the houses and letting them on rent. Continuously, he is buying many houses and giving the houses on rent. So it is his usual activity. It has become his business. But rent received is not taxable under profits and gains. The rent received is taxable under income from house property. Similarly, dividend received. Suppose a person is the dealer in security who receives the dividend from non-Indian companies. Then he is a dealer. So regularly he is receiving the dividend. So that dividend is taxable under the head income from other sources, not under the head profits and gains. But after 2004-2005 assessment year, after 2004-2005 Income Tax Act says dividend received from Indian companies are not at all taxable. Not taxable. If the company has paid CDT, corporate dividend tax, if the company has paid, then dividend received are not taxable. Winning from lotteries. If an SSC, if a person's main activity is continuously to buy the lottery tickets, so he is engaged in buying the lottery tickets in order to win the lottery. In that case, it has become his routine activity of purchasing the tickets in order to win the lottery prize. Continuously, he is winning the lottery also. In that case, it apparently looks like it is business, but winning from lottery is taxable under that income from other sources. So these are the points we have to remember regarding business incomes, but not taxable under the head business income. It is taxable under other heads. Now, methods of accounting. The profits and gains of a business or profession will be computed according to the method of accounting adopted. So we have two broad methods of accounting, that is mercantile system and cash system. Mercantile system of accounting is also called accrual system of accounting, in which all expenditure of the previous year and all incomes of the previous year will be taken, whether received or not, whether paid or not. For example, all the incomes of the previous year will be taken, whether received or not. Similarly, all expenditure of the current year will be taken, whether paid or not. So this method is called mercantile system. In this case, expenditure of the current year is equal to expenditure paid plus outstanding expenditure minus expenditure paid in advance. Similarly, income of the current year is equal to income received plus income receivable accrued minus income received in advance. In this way, we calculate the expenditure and income of the current year. Next method is cash system of accounting. In this cash system of accounting, we take only cash receipts and cash payments during the previous year. The outstanding and prepaid will not be adjusted. So most commonly method of accounting which is used to compute the income is mercantile system. Very few business people, they may adopt cash system of accounting. Now exceptions to the general rule. Normally mercantile system of accounting will be applied where all expenditure, whether paid or not, will be taken into account. But say there are some exceptions. Exceptions means those cases where expenditure paid will be allowed if it is outstanding not allowed. Normal circumstances, even outstanding expenditure is there, it will be allowed. Example, salary paid 1 lakh, 20,000 rupees salary outstanding. So we add 20,000, we take total 1,20,000 as expenditure on account of salary. But in these five cases, the expenditure will be allowed only on payment basis, even if the SSC follows mercantile system of accounting. What are the cases? First one, taxes. Any taxes due to the government, Income Tax Act says it will be allowed only on payment. If taxes are due, it will not be allowed. So taxes should be paid before the last date of the previous year or before filing the return, filing the income tax return. So if it is paid before the last date of the previous year or before filing the date of return, then only it will be allowed. If it is not paid, it will not be allowed. Only on payment basis, taxes will be allowed. Similarly, employer's contribution to provident fund. Employer's contribution to provident fund, it will be allowed only on payment basis. If it is paid, allowed. If it is outstanding, not allowed. Next, bonus or commission paid to employees. Again, same thing. Whatever is paid during the year, that will be allowed. If it is outstanding bonus, outstanding commission, not allowed. Next one, interest payable on loan taken from financial institutions like banks. If a loan is taken, interest has to be paid. If interest paid is there, it will be allowed. If interest is outstanding to bank, it will not be allowed as deduction. Similarly, any cess or fees payable under any law, any cess like water cess, etc., if it is paid, it will be allowed. If it is not paid, not allowed. So these are the exceptions where only on payment basis it will be allowed. If it is due, not allowed, even if the SSC follows mercantile system of accounting. right? So next point is points to be considered while computing income under this head. Some points you have to consider while computing the income under the head profits and gains of business and profession. What are the rules? Business is carried on by the SSC. First rule, the business should be conducted by the SSC. If the business is conducted by any other person, it will not be taxable. He has taken the help of agents or employees, then it is okay. So the SSC must run the business, must own the business. Business or profession should be carried on during the previous year. So the profits and gains will be computed if the business is carried on during the previous year. Our current previous year is 2019-20. Next is legality of business should not be considered. Income Tax Act is not bothered whether you are earning legal income or illegal income. Even illegal income, if a person earns, he will be put to tax in the same way as legal income. So legality is not considered while calculating profits and gains. Aggregation of business income. If a person is having two or more than two types of businesses, then we compute the income from business separately for every business and then we calculate the total. For example, a person, an SSC may be having some cloth business, some cement business, some fertilizer business. So different types of businesses he is having. So we compute the income from business for every business and later on we add up the total. Then recovery of some already allowed as deduction. Income Tax Act says if a deduction is allowed earlier for a particular item, later on if it is recovered, it will be fully taxable. For example, bad debts. In the previous year, bad debts was allowed as deduction. For example, even if an SSC has to get 1 lakh rupees from a particular customer and the customer has not paid, the SSC has treated it as bad debts. Income Tax Act has allowed that as bad debts in the previous years. Now during the current year, that 1 lakh rupees are recovered from that SSA, from that customer. Income Tax Act says now it is taxable. Because earlier the Income Tax Act has given the deduction. Now if it is recovered, it will be fully taxable. Notional profit not considered. Sometimes the head office may send the goods to the branches at an invoice price. Suppose the cost price is 10,000, invoice price is 12,000. So at 12,000 rupees, goods are transferred from head office to branch. If the goods are not sold at the branch level, then 2,000 rupees should not be considered as real profit. That is notional profit, not considered. Speculation business. If a person is having speculation business, the income will be computed as usual and put to tax under profits and gains. Then profit on sale of assets on winding up of the business. If a business is wound up, then assets are sold. When the assets are sold, any gain arised, it will not be treated as business income. It will be treated as capital gain, except stock in trade. If stock in trade is sold, then gain arised, then it is a business income. Other than stock in trade, if assets are sold, that will not be treated as business income. Then beneficial ownership. Income Tax Act sometimes will see the beneficial ownership of the business. If the real owner is not taxable, for example, Benami owner, one owner is there, he is the real owner of the business, but he is not taking all the profits. He has given all the profits to some other person. Some other person is called beneficial owner. So income tax will be charged on the beneficial owner. Income Tax Act will see who is really benefiting from the business. Anticipated profits are not to be considered. Expected profits will not be considered while calculating profits or gains of business and profession. Now, deductions in computing business income. See, the main important thing is which are the items which are allowed as deduction while computing the income. How to compute the income? We take the revenue minus expenses. Revenue minus expenses is equal to income. So in order to reduce the income, in order to show less income to Income Tax Act, the SSC may charge a number of expenditure. So in that case, Income Tax Act says we will give you conditions. What are the conditions to be satisfied to allow the expenditure as deduction? So important principle to be followed while giving deduction is must be revenue in nature. First of all, there are two types of expenditure: revenue expenditure and capital expenditure. Revenue expenditure are recurring expenditure whose benefit will expire within a period of 1 year. Example: salary paid, rent paid, printing and stationery, postage, telegram, telephone bill. All these are revenue expenditure. So while deducting, only revenue expenditure will be deducted, will be allowed. Capital expenditure will not be allowed. Second, must be expenditure to run the business or profession in the interest of the business. There should be relationship between the business and the expenditure. The expenditure should be conducted in order to run the business, should be in the interest of business. Suppose expenditure is incurred but there is no benefit, no interest to the business, then that expenditure will not be allowed. Next one is not be spent for personal use. The expenditure incurred should not give the benefit personally to the owner. The benefit should be accrued to the business only. Then only it will be allowed. Not be prohibited by any law. The expenditure should not be prohibited by any law. Example: bribes given. So according to Indian law, bribe is a criminal act. It is prohibited by law. So if a business says, I have given the bribe to run the business, it will not be allowed as deduction because it is prohibited by law. Then related to current previous year. When we are computing the income of the previous year, the expenditure should be related to the previous year only. If the expenditure related to any other year other than previous year, it will not be allowed as deduction. Next, deduction can be given only to the related business. That is, one business expenditure cannot be allowed as deduction in another business. That means the deduction will be allowed to that business only where we are getting the benefit. Example: if an SSC is having two different businesses, cloth business and fertilizer business, the expenditure incurred in cloth business will be allowed only in cloth business. The expenditure of cloth business will not be allowed as deduction in fertilizer business, or fertilizer business expenditure cannot be allowed as deduction in cloth business. Like it. So these are the points you have to remember while computing the profits and gains of business and profession. Now specific provisions are made in the Act for following deductions. Income Tax Act has given elaborate provisions for the following deductions. Now what are the provisions? Rent of the building. So Income Tax Act says rent paid for the building which is used to run the business is allowed as deduction. Next one is repairs to building. So repairs to building says repairs to building will be allowed as deduction if it is own building or if it is rented building. If it is rented building, repairs will be allowed if there is agreement to that effect. If there is no agreement regarding repairs and still the businessman has incurred expenditure on repair, it will not be allowed. Repairs are of three types: revenue repairs, capital repairs and capital expenditure. Revenue repairs will be allowed as deduction whether the building is owned or rented. Revenue repairs will be allowed. Whereas capital repairs will not be allowed if the building is owned. If the building is owned, capital repairs will not be allowed. But that capital repair will be added to the block of assets and depreciation will be allowed. If the business is rented, then capital repairs will be allowed as deduction. Capital expenditure like constructing another room, etc. So capital expenditure will not be allowed as deduction whether it is owned or rent premises. Then rates, taxes of building, that will be allowed as deduction. Rates, taxes and building will be allowed as deduction. Insurance of building, it will be allowed. Repairs to plant and machinery, allowed. Insurance of plant and machinery and other assets, allowed as deduction. Remuneration to staff, that means salary, bonus, commission, perquisites, all these things are allowed as deduction. But one point is there: bonus and commission will be allowed as deduction only on payment basis. If it is due, it will not be allowed. Whereas salary will be allowed even if it is due to the customers. Then remuneration to staff, then health insurance of employees, it will be allowed. Contribution to provident fund and superannuation fund, it will be allowed as deduction. Interest on borrowings. Sometimes the SSC may borrow the funds from individual or banks or financial institutions or government, like that. So interest, even if it is due, it will be allowed as deduction. But if the loan is taken from banks or financial institutions, then in that case, interest paid will be allowed, interest due will not be allowed as deduction. Bad debts. The debts which are irrecoverable are called bad debts. And regarding bad debts, Income Tax Act says bad debts will be allowed as deduction on satisfying some conditions. Some conditions are given that the SSC has taken all steps to recover the amount, the SSC has recorded the sales earlier, and bad debts are written off in the books of accounts. If all the conditions are satisfied, then bad debts will be allowed as deduction. But in problems, we assume that SSC satisfies all the conditions and he will get the deduction of bad debts. Expenditure on scientific research. Expenditure on scientific research depends on whether scientific research is done by the business itself or it is done by outside party. If scientific research is done within the business, then the research should be related to the business and all revenue expenditure will be allowed as deduction. Capital expenditure on scientific research will also be allowed except cost of land. Except cost of land, other capital expenditure on scientific research will be allowed. Scientific research given to outside party, it will be allowed as deduction if it is given to an approved institution or a university. In that case, 150% of the actual contribution will be allowed as deduction. This is regarding expenditure on scientific research. Expenditure on patent and copyright. If the expenditure is incurred after 1/4/1998, depreciation on acquisition of patent right will be allowed at the rate of 25%. So if the patents and copyrights are acquired after 1/4/1998, depreciation is allowed. Total expenditure will not be allowed. Suppose patent is purchased for rupees 1 lakh during the previous year. So 1 lakh rupees patent purchase will not be allowed. 25% depreciation on that 1 lakh will be allowed as deduction. Legal expenses will be allowed. Legal expenses will be paid to protect the business. Legal expense may be paid to take a loan or to enter into a number of agreements, etc. It will be allowed as deduction. Other deductions. Apart from these specific deductions, some other deductions are there. Example, security transaction tax, STT. Security transaction tax will be allowed as deduction if the business is having interest on securities and securities are part of part of stock in trade. If securities are part of stock in trade, then interest on security is a business income. When interest on security is a business income, then STT will be allowed as deduction. If interest on security is not a business income, then STT will not be allowed as deduction. Then next one, deposit under OIT. Own your telephone. OIT stands for own your telephone. The deposit made under OIT scheme will be allowed as deduction. Expenses incurred on Diwali. In India, one festival is there, Diwali. To expend a reasonable expenditure incurred on Diwali will be allowed as deduction. Then subscription to trade and professional journals, it will be allowed. Then lawful expenses of illegal business will be allowed as deduction from illegal business income. But if payments are prohibited by law, then it will not be allowed as deduction. Income Tax Act does not make any distinction between legal income and legal business and illegal business. The income earned from illegal business is also allowed, will also be taxable. And expenditure, lawful expenditure incurred to conduct the illegal business will be allowed, provided it should not be prohibited by law. Example, the expenditure is regarding bribe given to conduct this illegal business. The bribe paid will not be allowed because it is prohibited. So, tournament expenses. If tournament expenses is to promote the business, it will be allowed as deduction. Audit fees allowed. Expenditure on holiday home. Some business houses, they will keep holiday home so that employees can go and stay in the holiday home to refresh themselves. In that case, expenditure incurred on holiday home will be allowed as deduction. Presentation of articles. If articles are given to promote the business, articles are given to customers to promote the business, it will be allowed as deduction. Then entertainment expenditure. There are no restrictions on entertainment expenditure. Entertainment expenditure is allowed as deduction. Advertisement expenditure. If the advertisement expenditure is of revenue in nature, it will be allowed as deduction. If it is capital expenditure, it will not be allowed as deduction. Next one is traveling expenses. The traveling expenses incurred by the employees to in the interest of business, it will be allowed as deduction. So these are some of the other deductions which are allowed. So whatever provisions I have explained you, these are the provisions we have to apply while computing the profits and gains of business and profession. So we have discussed about the deductions which are allowed under the Income Tax Act. Now we will discuss those expenses and losses which are not allowed as deduction. The expenses and losses which are specifically not allowed as deduction are: first one, provision for doubtful debts. If provision for doubtful debts is already debited in the P&L account, it is not allowed. It will be written back. The provision for doubtful debts will not be allowed. Bad debts will be allowed. Bad debts are allowed, but provision for doubtful debts will not be allowed. Provision for taxes, whether taxes are income tax is paid or provision of a tax is made, not allowed as deduction. Personal taxes like income tax, gift tax, etc. are not allowed. Income tax, wealth tax, gift tax, these are personal taxes. These are not allowed as deduction. Whereas the business taxes like GST, entry tax, excise duty, customs duty, etc. will be allowed as deduction. So these are the points you have to remember while solving the problem. In the next video, we are going to start the problems on profits and gains of business and profession. While doing the problems, you have to remember all these points, which are deductions allowed and which deductions are not allowed. So now expenses not relating to business. If any expense is there, we have to see whether it is related to business or not. If an expense is not at all related to the current business, not allowed as deduction. Any personal expenses paid from the business. The personal expenses of the owner or the proprietor, if it is paid from the business, like household expenses. Household expenses are personal expenses. If it is paid from the business, it is not allowed as deduction. Interest payable on amount borrowed from outside India, if TDS is not made, not allowed as deduction. Income Tax Act has given that if money is borrowed from outside India and interest has to be paid outside India, then Income Tax Act says TDS should be made. Tax deducted at source should be made from that interest. If TDS is made, it will be allowed. Interest paid will be allowed. If TDS is not made and directly interest is paid outside India, not allowed as deduction. Then capital losses will not be allowed as deduction. Only revenue losses will be allowed. The losses which are recurring, expected losses are allowed as deduction. Whereas non-recurring losses, that means capital losses, like loss of asset by fire. Loss of asset by fire is a capital loss. It will not be allowed as deduction. Then fines and penalty paid for violation of any law is not allowed as deduction. If a business has paid the fine or penalty in violation of law, then it will not be allowed as deduction. Next one, notional payments like interest on capital or salary paid to proprietor. Notional means imaginary. Some imaginary expenditure will be debited to P&L account like interest on capital. Income Tax Act says interest on capital will not be allowed. Interest on loan will be allowed, but interest on capital not allowed. Similarly, salary paid to employees, workers allowed, but salary of owner or proprietor not allowed as deduction. So these are the expenses and losses which are specifically not allowed as deduction. Now, according to IT rules, payment of revenue expenses exceeding 10,000 has to be made through account pay check or bank draft or through any other electronic mode. Specifically, one provision is given by income tax rules that if any revenue expenditure exceeding 10,000 rupees should be made either through account pay check or a bank draft or through any other electronic mode. In that way only revenue expenditure over 10,000 can be paid. If that revenue expenditure is paid over 10,000 in cash, it will not be allowed as deduction. So condition is given, revenue expenditure over 10,000. It should be paid by account pay check or bank draft or any other electronic mode. If it is made in cash, it is not allowed as deduction. Note, the above rule does not apply for payment. Some exceptions are there. In those exceptions, even if it is made more than 10,000 in cash, it will be allowed. So what are the exceptions? Payment for capital expenses. Because the rule applies only for revenue expenses, recurring expenses. If capital expenses are paid over 10,000 in cash, it will be allowed. Then repayment of loan, drawing of proprietor and payment made to government or financial institution or a cultivator for purchase of agricultural produce or payment made on a day when the bank is closed due to holiday or strike. So these are the circumstances where this rule will not apply. When the payment is made to government, when the payment is made to financial institution, when the payment is made to a cultivator of agricultural produce from whom we have purchased the agricultural products, or if the payment is made on a day on which there is a bank holiday or strike is there in the bank. Under these circumstances, the SSC can pay more than 10,000 in cash. If the payment is made through debit card or credit card, the above rule does not apply. If the payment is made through debit card or credit card over 10,000, it is allowed as deduction. If payments are made in cash or bearer check means open check without crossing, and or simple cross check, it is not account pay check but simply crossed check, for more than 10,000, then 100% of such payment is not allowed as deduction. It is not allowed as deduction. Suppose in the coming problem, it is given that 15,000 rupees is paid in cash for purchasing the stationery. It's a revenue expenditure. So Income Tax Act says when you purchase the stationery for more than 10,000, you must have issued account pay check, bank draft or any other electronic mode through credit card. You should not pay in cash or bearer check or simple cross check. This is the provision. 100% it will be disallowed. So these are the provisions you have to remember. Now, procedure for computing income from business. How to compute the income from business depend on what is the method of accounting they are maintaining. If the method of accounting is mercantile system of accounting, profit and loss account will be prepared, P&L account will be prepared. And if the business follows cash system of accounting, receipts and payments account, income and expenditure account may be prepared. So we have to see what is the method of accounting the business follows. If the business follows mercantile system, profit and loss account. So model 1, when profit and loss account is given. So how to compute the income from business according to the provisions of IT Act if profit and loss account is given. So here take net profit as per P&L account. First of all, in the problem profit and loss account will be given. And in the profit and loss account, net profit is already given. So take the net profit as our base point, starting point. So first take the net profit as per P&L account. To this add inadmissible expenses. Inadmissible expenses means those expenses which are debited to profit and loss account, but Income Tax Act has not allowed. Income Tax Act disallowed. What are the disallowed items? Here just now I told you, provision for tax, provision for doubtful debts. These are the expenditure, personal expenses, notional payments, amount paid in violation of law. All these are the expenses which are specifically disallowed by the Income Tax Act, but already debited in profit and loss account. Those items are called inadmissible items. Those inadmissible items should be added. Deduct expenses which are related to business but not debited to P&L account. Some expenses may be there which are allowed by Income Tax Act but not debited to P&L account, not debited to profit and loss account. Now we deduct. Then deduct incomes which are to be taken on the other heads. Sometimes in profit and loss account credit side, some incomes are given which are not related to business income. Example, rent from house property, dividend received, interest received. These are the incomes which are credited to P&L account. But Income Tax Act says these incomes are not business incomes. These incomes are taxable under other heads of income. So now deduct. Now we have to deduct. Add incomes related to business but not created to profit and loss account. There may be some incomes which are business incomes but not credited to P&L account. Now we add. Now we add those incomes. So after making all these additions and subtractions to net profit as per P&L account, we'll get the income. We'll get the income as per the Income Tax Act. So this is the procedure we have to apply when profit and loss account is given, and we have to find out what is the income of the business. Now, model 2, when receipts and payments account is given, sometimes the SSC follows cash system of accounting. When cash system of accounting is followed, normally they will prepare receipts and payments account or income and expenditure account. The receipts and payments account, if it is given in the problem, how to find out the income as per Income Tax Act. So here, step 1, take all the revenue receipt relating to business. On receipt side, all receipts will be given, whether revenue or capital receipt or relating to current year, relating to next year, every personal receipt, all the receipt will be debited to receipts and payments account. Now first step, you take only those receipts which are revenue receipt of the business. Revenue receipt of the business. Second, take the total of all revenue receipt. So many receipts are given on the debit side. From those receipts, select only revenue business receipts. Other receipts just ignore, like capital receipt, personal receipt, and receipts not related to this business. All those receipts you ignore. Only revenue receipts of the current business. Then take the total of the receipts. Deduct the revenue payments. On the payment side of receipts and payments account, we find all payments. Revenue payments, capital payment, payment relating to current year, payment relating to last year, payment of personal expenses. All the payments are given. You have to select only those revenue payments related to the business. Then take the total. Deduct depreciation as per income tax rules. If assets are used, depreciation is allowed as per IT rules. Then deduct the depreciation allowed as per IT rules, will get the income as per Income Tax Act. So in this video, I have explained you briefly the provisions of how to compute the profits and gains of business and profession. So many more points will come. While doing the problem, I'll discuss many more points. But these are the basic points which I have discussed in this video regarding how to compute the profits and gains of business and profession. So watch this video till the end, once, twice, thrice. Then only you can be able to solve the problem with confidence. So if you are satisfied with my lecture, give a like to the video. Share this channel in your group, in your friend circle, so that more students can watch the video and increase their knowledge. Give your comments on this lecture. And lastly, don't forget to subscribe my channel. In the next video, I'll start the problems on computation of profits and gains of business and profession.